Good morning, ladies and gentlemen. My name is Greg MIchalowski from ForexLive.com. Today's date is November 7th, 2022. This is Morning Forex Technical Report, where I take a look at some of the major currency pairs from a technical perspective. So let's get going. Over the weekend, I did my Forex report, which outlines not only some fundamental views, looking at the fundamental news from last week and what we have coming forward, including the CPI data, but also take a look at the technicals, because the technicals are what really drives the market. We saw that happen on Friday. We had a stronger than expected jobs report, and you might expect that the dollar would get stronger. Initially it did, but then it started to weaken, and we saw technical levels being breached, and that led to even more movements in the dollar selling direction, and that has continued in trading here today. So it's the price action, it's the market, it's all those traders out there who push the price in one direction or another that define the bias, that define the risk, and that's what I'm going to go through in this morning report here today. So if you haven't seen my weekend report, please go to it, take a look at it, just as a review, get yourself in the mood, in the groove, and then we'll continue it with this supplement reports through the week. So let's get going. We'll take a look at the euro versus US dollar on the hourly chart. On the weekend report, I talked about the 0.99515 level. That level, of course, corresponds with the July low right here. And we tried to hold that level in September before rotating to the downside and moving all the way down to our lows for the year. The cycle low, that was this move right here, all the way down to 95.35 before we started to rotate back to the upside, where we found resistance against the 100-day moving average. So that 99.51 level, let's go back to the hourly chart here. And in trading here today, the market opened up below that level and moved down through the 200-hour moving average, which was a base point from Friday. And that low moved to the bottom of this swing area, right around the 99 level. And the price found some bids there and started to move up in the first hour. We might attribute this decline to just the market getting its feet under itself by moving below the 200-bar moving average, but coming down to the support level, finding support, getting back above the 200-hour moving average. And like we saw on Friday right here, what happened right here? Well, we found the buyers against the 200-hour moving average, and we started to move up. Where do we move up to? The 99.51 area before the market rotated back down to this swing area, and then moving above the 51 level into our next swing area, target area, which comes in right here with all these swing lows and swing highs through here, after making the extreme up here. And we moved just above that level, which is right around the parity level, moved a little bit above it, and then rotated back to the downside. And we're trading we're trading below the parity level. We went back up to test that level and then rotated back to the downside. So the technicals still remain in play. We can use this level where we are right now as a really close support level, or we can use the 61.8% retracement, the 0.99515 level as support, and hope that for the buyers at least, because the bias is bullish, that the price rotates in this somewhat direction if we were to correct lower. Alternatively, if we move higher above here, we still need to get above the parity level and stay above that level. On the top side, we have the 100-day moving average. Recall that over here on the rotation back to the upside toward the end of October, we stalled right near the 100-day moving average, and that's what turned the price all the way back to the downside. So that 100-day moving average remains a key level right now. The buyers are in control. We got back above the 51 level, back above or trading near the old high from last week. And we'll see what happens going forward for the euro versus US dollar. Let's take a look at the dollar versus yen next. And I spoke to, on Friday, we fell below this swing area through here, not once but twice. And we closed below that area, this swing area, a number of different points along it here, where the market paid attention to this area right here. And then we did have this FOMC move to the downside, and again on Friday we came below it not once but twice, and we closed below it. So we needed to stay below this area in the new trading day today. We couldn't. We started to move back higher, but We also need to get above the 100 and 200 hour moving averages. And when we saw the 100 hour moving average stall the rally today, sellers leaned against that level and pushed the price back below this swing area. And you can see how the market used that level as resistance and moved down to our next target level, which I outlined as, our different lows through here. Here where the price found some buyers or sellers against that level. We might use this level as well. So we're right here at this low right here. We need to get below that level and stay below that level. This is our close risk for the dollar versus yen. Stay below the 146. What is that? 81 to 98. And the sellers remain in control. Currently trading at 146.46. So comfortably below that level, but we did find support against our target, one of our targets on the downside for this currency pair. Let's take a look at the sterling versus US dollar in the weekend report. I spoke to how the 100-hour moving average stalled the rally on Friday. Near the close, we gapped lower like we saw in the euro, and then moved below the 38.2% retracement, which was our first target. A lot of room here because the market didn't really leave any places to find support against. But once the price moved back above its 38.2% retracement, what do we see? We saw the sellers turn to buyers right through here. And when we moved above the 100-hour moving average, we saw even more buying enter the market, push the price up toward the 200-hour moving average, toward this swing area through here. Again, a number of different levels through here, which defined this swing area. What are we seeing? We've seen some sellers come in this area near the 200-hour moving average. Guess what? We need to get above and stay above the 200-hour moving average, and then get above the 114.95 level. Let's call it 115, and to push this pair further to the upside. On the downside, I could see maybe. Whoops. Let me put a better line on there. We could see this line right here, and might as well leave it at that. And this area through here, this is probably a decent area that we would want to see. The best case scenario would see this area hold. We have a swing high here, a swing low near that level, a swing low right here, break below the level. And in trading today, we did see a break a little bit below that level, but held above the high that we saw on Thursday before the or Wednesday before. That's Thursday before the sharp move to the downside. So this area between here and here is probably our key support to base against if we're going to go higher and get above the 115 level, get above the 200-hour moving average. Finally, I want to take a look at the dollar versus Canada. I mentioned in the weekend report how the price had moved into this, or moved outside of this box toward the close of Friday. This box had a number of different lows through here. You can see them visually. On the top side, we had on Thursday we went up and tested the top side swing area up here, and found willing sellers against that level. Moved below the 100 and 200-hour moving average on Friday. Or this is not hour. This is a 4-hour chart. So the 100 and 200 bar moving average of the 4-hour chart, and rotated and closed below this lower end of this swing area. That lower end comes between 135 and 135.10. And in trading here on the early move to the upside in the dollar versus Canada, the price did move above that level, but then rotated back to the downside. We're currently trading at 134.93. We're below the 135.10 level, below the 135 level, below the 38.2% retracement. So not as all lost here for the sellers. The sellers still remain in control with the 134.078 level as the next target on the downside. Should that momentum continue in that direction, if the price moves back above the 135.10 level, that may be it for the idea that we're going lower in the dollar versus Canada, at least in the short term. So watch that level in trading here today. So there you have it. A look at some of the major currency pairs going into the new trading day, into the new trading week. My name is Greg MIchalowski. Good fortune with your trading. Bye-bye now.